Okay, so in this video, we're going to be talking about how price is fractal, what that means, and how you can utilize this information to form a trade plan to get really good risk reward. Because if you want to get good risk reward, I'm going to show you how to do that in this video. Okay. And just, really clean setup. So we're going to use this NASDAQ right here for an example. So what you need to understand about price being fractal is what occurs on one time frame occurs on another time frame. The same signatures that you see in price, everything you see in price, like the highs, the lows, all, it happens on every time frame, whether it's the daily chart, the weekly chart, the 4 hour, the 1 hour, 15 minute, 5 minute, 1 minute, and below. Okay. The same exact price movements that you see here occurs on lower time frames. Power of 3 occurs on all time frames, which, a lot of people weren't aware of. Power of 3, which is, of course, if you're familiar with ICT's content, you know what I mean. It occurs on different time frames as well. It's not just subject to one time frame. So I'm going to use this example in NASDAQ from the other day here. So we had this thing, right? We had this NASDAQ right here, and this is what we've talked about this. This is what? This is a bearish shift in market structure. And for the folks that are not aware of what market structure, like what a shift in market structure looks like, I'm going to link some videos in the video description that you can watch that'll inform you on that. And I have an entire playlist on market structure that you can watch. Okay. We'll talk about it real briefly here. So of course, you can see the fair value gap. You can see the strong close. You can see how it ran out this liquidity right here. So this thing was pushing up. Price was in a bullish trend until it had this leg lower right here. You see? Look at my cursor. Look at where it's moving. You have a leg lower right there. Okay, and that's your shift. But let's say, for example, like you want to play this, and let's say like you want to run out this low because it's a bearish shift. And if it's really a bearish shift in market structure, what is price going to want to do? Price is going to want to find resistance and then roll over to attack this sell side liquidity down below right there. Look at my cursor right there. But let's say you don't like it, like you don't like the risk reward, right? Let's say, okay, I get it. It's bearish. I understand it's drawn to this low down here. And it came up into a premium right there. And you could go short right there. And I was talking about this. I plugged this in chat before it happened that it's probably going to come down and take care of this low right here. But you might say, okay, but I don't really like the risk reward there. I want a little bit better risk reward on my plays. And I don't like that. So what do you do in that case? You utilize a lower time frame because guess what? Price is fractal. This same exact signature, pay close attention. This same exact signature that you see right there, that 15-minute shift that you see occurs on a lower time frame as well. So here's what you want to do. If you want to get good risk reward, if you want to kind of narrow down your entry, get a little bit more precise with your entry, what you want to see is you need to have multiple time frames here. So I'm utilizing this 15-minute right here, and you see the shift in the 15-minute, okay? On your higher time frame, so in this case a 15-minute, you want to see it come up into the premium first, okay? That's above 50% equilibrium with that price range. You've already confirmed you got a bearish shift. It has all the signatures for a shift here. But once it comes up above 50% equilibrium with that price range, what you want to do next is you go down to a lower time frame. Let's go down to a 5-minute. Because you know what you're going to look for, folks? You're going to look for that same signature because what occurs on a higher time frame occurs on a lower time frame. The same exact identical signatures. This is what we mean when we say price is fractal. And here's the thing. This is where you get good risk reward because you already understand that if you are truly correct, that indeed is a 15-minute shift, that range that I had drawn out, that I had the Fibonacci laid on, you understand if you're correct, it's going to attack that low down there. You see? So you've already confirmed, okay, it's pulled up into a premium. Look, follow my cursor. Just follow my cursor. It comes up above 50% right there. Right there. It's in an expensive marketplace now. We're just on a 5-minute now. And then look right here. I want you to pay close attention. Look. Look right there. So do you got a fair value gap in there? Look right here. I'm going to draw it on the chart for you. I know I got the Fibonacci on there, and I'll remove it here in a moment. But you see how you got that fair value gap right there? And you see how you got that strong close between that short-term low? And guess what? It came up to an expensive marketplace within that 15-minute range. So think of it like prices had a chance to breathe. It's moved up into an expensive marketplace within that 15-minute price range. And here's the key thing. You still got that level down below intact. That's your draw. That's your draw on liquidity right there, because you've already confirmed it the 15-minute shift, and now you utilize the lower time frame because you have the understanding that price is fractal. What occurs on a higher time frame occurs on a lower time frame. So now that it's moved up into expensive marketplace, you get a bearish shift off an expensive marketplace within that 15-minute. You get the fair value gap, you get the strong close, the same exact signatures that you got on that 15-minute, you got on the 5-minute. So what do you think you're going to wait for now to get your better entry, to narrow down your risk reward? What do you think you're going to do now? Remove the Fibonacci, because you already understand if you want to get good risk reward, you could target that low right there where my cursor is. That's valid because it's a low of that 15-minute. That's the low of that 15-minute. And if you're correct about the 15-minute is really a bearish shift, you can target that. Okay. What does price do? It comes up into a premium marketplace. And you could do this high. I mean, that's pretty wiki. And this is the high of the fair value gap. So you could do this range right here. You see what I mean? And you could even narrow it down even more and get an even better entry by utilizing optimal trade entry, which is just 62% on the Fibonacci. Okay. But look, and of course you got that imbalance up there that you could wait on. But let's just say, just to avoid, being perfect here, you could enter right there on that push up into a premium. As soon as it comes, you could literally set your limit order at 50% because now you got to confirm 5-minute bearish shift. So here's what's available to you. You got in right there and you're risking the high of that fair value gap. And you're targeting at that low. Just like that, folks. Look, you went from about a 1-to-1, maybe slightly over 1-to-1, depending on what you wanted on that 15-minute. If you were just utilizing the 15-minute, you got about 1-to-1, just wait for a premium and taking out that low. But just by utilizing that lower time frame now, because you have the understanding that price is fractal, and you utilize the shift on the lower time frame after coming up into a 15-minute premium, you went down to your 5-minute, you waited for that bearish shift, you waited for the premium on the 5-minute now, and you still got that low intact. That's the key thing. Because here's the thing, this is very important too. If this thing came down right here on that displacement on the 5-minute, that displacement on the 5-minute, if it came down without giving you a pullback, and then it came down and took out this, and then it gave a pullback, you wouldn't trust that range at that point. Because as I always tell you, the liquidity is what gives it validity. The liquidity is what gives it validity. So that is your draw. So you want to see that draw left intact, because that's the low of that 15-minute shift. But now you're utilizing the 5-minute, your lower time frame. This is the importance of multi-time frame alignment, because then you can get good risk reward if that's what you want. Okay. So then there's your 2-to-1 right there. And that's just entering at 50%. And that's what's available to you. You could have been more picky with it, because if you understand you get this imbalance up here, so it does have a reason to move up there. Sometimes you'll miss it, and that comes with being picky with your entries. But if you wanted to wait for that, then guess what? You could have, look at that. You got 3.63. That is amazing risk score. That's amazing. And the thing is also, it's not really an aggressive PT or anything. It's still a fairly low hanging objective area. You see what I mean? And with something like that, you don't got to be right that much either to be correct. You can be right less than a coin flip, and knock it out the park. And that's just by utilizing multiple time frames, various time frames. You see what I mean? So then you're looking for the same signatures that you look for in that 15-minute. You're just dropping down to a lower time frame. You're utilizing the premium or OTE. Okay, 50% or 62%. You can get a better entry, or just wait for the imbalance. Risk the high of the displacement. Target the low of that higher time frame that you're looking at. Target the low of that higher time frame to get better risk reward. And I'm not saying you got to do it like that. You could just take a low hanging objective still if you want to, or you could just partial out of it and just ride the trend at that point. But that is a perfect example of how price is fractal, and this repeats. What occurs in the higher time frame, your higher time frame shifts, etc., they occur in the lower time frame, and then you utilize that lower time frame to narrow down your entry to get better risk reward. Because the thing is, you're not risking that high anymore. That's the high of the 15-minute, but there's no reason to risk that if you get that lower time frame now, because it's already moved up into what's considered an expensive marketplace. And that's another thing here, folks. If you want to improve your accuracy, your win rate. Make sure though on that higher time frame, whatever your higher time frame is, it may be the 15-minute, like it is for this example, it's the 15-minute. It's higher time frame than a 5-minute, of course. Sometimes it may be the 1 hour, but for higher probability deals, for a higher win rate, make sure it's pulled up into an expensive marketplace within that higher time frame range. Okay, and then you look for your shift after it pulls up into your premium within the higher time frame. And then, of course, on the lower time frame, guess what? Just like it moved up into an expensive marketplace on the higher time frame, on like your 15-minute in this case, it comes up into an expensive marketplace on the 5-minute within this range. And then that's where you get your entry at. That's where you know your entry. Oh, and guess what? This can even be taken a step further. Now, I don't want to overcomplicate, because like you can see right there, the risk reward's already solid. And then if you start going down too much and you start missing a little bit more plays, and that's kind of what comes with it. But I just told you, what occurs in a higher time frame occurs on a lower time frame. So here's the question to ask yourself next. What's lower time frame than a 5-minute? What's lower time frame than a 5-minute? A 1-minute. So here's another thing. This comes up into a premium within this 5-minute now. Look, we're going to take it a step even farther. We're going to take it another step farther. Look, this comes up into a premium within that range now, within that 5-minute range. So guess what? You could still target this down here. But now what do you think you're going to do now? What do you think you're going to do now? If you want to target this low down here, you still, your profit target, if you want good risk reward, that is, you could still target this because it's below the 15-minute. And now the 5-minute has come up into an expensive marketplace. Go to your 1-minute now. Go to your 1-minute. Let's see if we got a 1-minute shift. Let's just see if we do or not. We may not. And if we don't, that's fine. But this is how you do it, though. Even if it's not there, this is how you do it to get better risk reward. What do you know? We got it, folks. Look right there. Look at this. Premium within the 5-minute. You see that? It's already come up into an expensive marketplace on the 5-minute now. And now look right here. Pay attention. Look right here. It comes up to an imbalance and look. Boom. Look at that leg lower. Let me remove my Fibonacci because we've already established it came up into an expensive marketplace on that 5-minute now. The 15-minute and the 5-minute. The 15-minute and the 5-minute right here. And then look. You get your fair value gap. You get your strong close beneath that short-term low. Look at that. What do we call that? What we call that is a 1-minute bearish shift in market structure. And now what do you think you're going to do now? What do you think you're going to do now? You're going to wait for a premium within that range. If you want to take it a step further and go down to the 1-minute, then you can enter in a premium, or you could enter within like optimal trade entry within that range and do it like that. So again, Fibonacci from this 1-minute now to that low, and you can see you got 50%, you got OTE. It's really just how aggressive that you want to be with narrowing down your risk. Then you could risk that high now, because here's the thing. Remember, it's come up into an expensive on the 15-minute. It's come into an expensive marketplace on the 5-minute, and now you get the 1-minute shift. So if you're really correct on this, it shouldn't go higher than this. Now, will it still do it sometimes? Sure. Of course, sometimes it's going to still have another stop run. You're going to have to accept that. But guess what? With what I'm showing you here, if you want to go that big risk reward route, I just told you it's less than a coin flip that you got to be right to just knock this out the park. Just to knock this out the park. It just takes less than a coin flip if you're doing it like this. All right. If you want like really, really high win rate, then just run out the low hanging objectives. But look right here. Look at what is available to you. 3.67. So it ain't much more than like what that 5-minute, but you can see it depends on how aggressive you want to be with the pullback as well. If you could wait for like OTE in that area and then, oh, look at that, folks, you're getting 5-1 now. Now you're getting 5-1 risk reward. And you're not really even shooting for that big of an objective. That's the thing. It's just the low of that 15-minute. You're just utilizing lower time frames. You're utilizing premium. In this case, since it's a short scenario, if it would be a bullish scenario, you would just reverse it. Like what I'm telling you here, just reverse it, be a discount. So you're utilizing market structure, utilizing multi-time frame alignment, because price is fractal. You're utilizing premium and discount. And then you're just managing risk, just like that, folks. And then you're running out that low right there. Look at what it does. It just smooth as butter. Smooth as butter. Oh, and guess what? I think you guys get the point, but you know what you can do with this now. I don't go lower than a 1-minute. I know ICT. He goes down to like, and this is where that comes into play. You know what you can do here now? You could take it a step even farther. Yep, that's true. You could take it a step even farther. And below that 1 minute, you can go down to like a 15-second now. You see what I mean? Like now this has come up into an expensive marketplace within that range. You know, as you can look for your displacement on like that 15-minute now, and you can narrow it down even more. So guess what? You get down to a lower time frame. I don't utilize a lower time frame. I don't even got that in my trading view, I don't think, because I just don't find it necessary to even go to that point. But maybe you do, right? Whatever works for you, right? And you can explore that, because then guess what? It comes up to an expensive marketplace within that range, and now you get a displacement within an expensive marketplace within that range, and it's already expensive on all these time frames. All these time frames, it's expensive, and you got a clear draw down below down there. Now you can go down to take it even a step further and narrow down your entry, and then risk that high right there. Now you're really, if you get it right, like you really are getting huge risk reward on this play, huge winners on this play if you're doing it like that. You see what I mean? What comes with big winners? Because people seem to forget. Because I don't preach like anything like a holy grail. Because what comes with like really big winners is typically more losses. Because you're going to mistime it sometimes. But you can see what I mean. Like this is the key point I'm driving across as well, is the fact that if you want to do it like that, if you want to go the big risk reward route, you don't got to be right that much either. You can be right 50% of the time absolutely doing this. If you utilize the rules I'm giving you and you multi-time frame alignment, you look for those nice big displacements, and you got everything where you need it, you can be right, 50% of time, even over 50% of the time, you get really good. And think about that. If you're nailing 2 to 1s, 3 to 1s, I'll just show you a 5 to 1. It doesn't take much, and you're slamming it out the park. You are eating, absolutely eating. And that's how you do it. That's how price is fractal. What occurs on one time frame occurs on another. And then you can utilize multiple time frames, utilize premium and discount, and then you can target these larger liquidity pools down below if you have everything in conjunction. And that, my friends, is how you get really good risk reward. I hope you enjoyed this video. I hope you got immense value. If you did, leave a like, subscribe to the channel. I'll catch you later.